Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very excited and grateful for life and for being with you here this morning as we are going to be taking another fresh new look at the financial market. Before we kickstart the session, let's run through our daily routine just to confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. So you typing hi will give me a positive feedback that we are good to go this morning. So I look forward to your feedbacks right in the comment section while I load up my chart. Thank you very much as you do so. All right, so let's see what we have here. I can see Edge Lopez. Thank you very much, Edge Lopez. Good morning to you. Varan, good morning to you. Hello, Carrie. Good morning to you. Thank you very, very much. So I think with this couple of feedbacks here, I will take this as a positive confirmation that we are good to go this morning. So once again, I welcome you all to yet another promising edition of the Extreme Speed Live Technical Analysis Session, your daily dose of financial insights and trading strategies. Well, it has been quite an interesting week for us so far. Remember, we have been monitoring four major financial assets since the beginning of the week, which includes the US All Spot, the USTech100, the GBPUSD, and of course my favorite asset, the XAUUSD. And so far this week we've had quite interesting trading conditions as despite the choppy market conditions, we were able to position ourselves for significant traction. Look at the US All Spot, for instance. This asset has done phenomenally well for us so far this week as we've been able to scoop in close to 500 pips on that particular asset, which is not bad for the first half of the week. The USTech100 has been struggling anyways, with the intention of getting a directional move, but we will be looking at that today. And likewise, the GBPUSD and the XAUUSD has recently gained some traction, which makes us have a positive portfolio at this point in time. So I would, in preparation for today's New York session, have been able to identify simple trading setup using our basic tools such as the trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. And today happens to be a very, very eventful one. As you all know, everyone in the market is looking forward to the GDP from the United States to give an insight into how well the economy has been performing in the last quarter, which of course will be helping the Fed policymakers to be able to make a decisive decision as regards to how they will be initiating their easing cycle for this year. And of course, everyone will definitely be looking forward to that. And I'm of the opinion that we are likely going to be seeing a major traction happen in the market today. So we will be taking this into consideration while we strategically position ourselves for the next move. So I encourage us all to stay tuned in so you don't miss out on the insightful ideas we will be deliberating on today. And for those of you who are joining us for the first time today, I'm very excited to have you around with us this morning, and I do know that you will be wondering what this is all about. What is it that we are doing here? As technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. This session officially kickstarts 10 a.m. UTC, 11 a.m. West African time, so stay tuned in so you don't miss out on the insights that we will be sharing today. And it's important for you to also consider that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do every morning is to try and keep tabs with the fundamental factors that will be affecting the market sentiments today. And we all know that these fundamental factors often has a way of manifesting on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing, of course, to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, based on these assets we are monitoring for this week, we have been focusing on economic features from both the United States and the United Kingdom economic docket. And so far this week, we've had some buckets of economic features, though we yet to have a high impactful event. But we were also monitoring the mid-tier economic features to have a broader view into what market participants will be looking forward to. So since the beginning of this week, we've witnessed the new home sales change, which did very well. We also saw the durable goods order from the United States yesterday, which wasn't that promising at all, as the data came in below expectation, giving us a whooping deficit variance of minus 2.70. Then yesterday also we saw the housing price index, which of course wasn't that promising too as well. So the data coming in from the United States wasn't rosy, and despite this, we still see price action gain some traction in favor of the US dollar. So we are going to be looking at that in a moment. Then we also had the speech from the deputy governor of the Bank of England, that's Ramsden. And one of the major highlights from his speech is how he expressed the need for more evidence of easing inflationary pressure before considering rate cuts. Despite this hawkish remark, the pound sterling hasn't responded positively as regards to this. So today we will be looking at how we will be managing these positions while we monitor price action. So I encourage us all to stay tuned in so you don't miss out on this one. Now today, Wednesday, February 28th, we are looking forward to a handful of events. So we have both high impactful and mid-tier economic features to look out for. Now, the first one on our watch list for today is the gross domestic product annualized for quarter 4, which is coming up in about 2 to 3 hours from now. Now, for those of us who do not know how important this is, the GDP is a key economic indicator representing the annualized percentage change in a country's real GDP during the fourth quarter. Now, the anticipation of this event can significantly impact market sentiment as it provides a comprehensive view of economic health and growth. And of course, we have been seeing how the market has been choppy and showing signs that major key players in the market have stepped aside, waiting for this data before making any informed decisions. A higher than expected GDP growth often strengthens market confidence, leading to positive price action and potentially influencing the Fed's decision on interest rates. Then later on today, we will be looking at the core personal consumption expenditure, which measures the average change over time in the prices paid by consumers for goods and services. So this is another event we will be looking forward to. And besides this event, we have some handful of speeches from both the United States and the United Kingdom. We are looking at Mann's speech, which is coming up in about 6 hours from now. We also have Bostic, Collins, and Williams speeches, which is coming up later in the day. And of course, we all know how important this speeches is, especially in a situation where market participants are trying to understand and see how the Federal Reserve is going to be deciding on the easing of their monetary policy for the year. So these speeches will definitely give us an insight into the monetary policy stance, economic outlook, and potential future policy action. So these are the high impactful events we are looking forward to. And as a result of this, we all know how these events, the anticipation of this event has a way of influencing the market sentiment. And of course, this will definitely reflect on the chart as price action. So in that regard, what we will be doing today is to try to sniff through the current market dynamics, looking out for patterns and structures that we will be using to strategically position ourselves for the next move. So I encourage you to stay tuned in so you don't miss out on any of the ideas we will be deliberating on today. So moving on the next the asset we will be looking at this morning Sorry for the break in transmission. I lost my audio and I hope you can hear me now. All right, so the first asset we are going to be looking at this morning is going to be the US All Spot. And what a phenomenal week we have so far. Since the beginning of the week, we have been buying this asset, and we at this point we had about 5 to 6 buy positions on this particular asset. So let's quickly run through how the week began and what led to the situation we have at this point in time. So at the beginning of the week, we were noticing how price action was initially confined within a range, and that was between the $76.50 level and the $75.87 area, to emphasize the level of indecision going on in the market at that particular point in time. And usually whenever we have this kind of situation, you know how we do it in this community. We exercise patience and wait for a signal to come in the form of either a breakout of the resistance line of the range to give us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. Now, while we were trying to decipher what the next line of action would be after identifying the structure on Monday, we begin to notice how it has become difficult for sellers to break through the $75.87 area. And this has happened. This lasted for about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 hours at the beginning of the week. And one other thing that made it clear that price may likely be going up was how the price wasn't able to settle below the $75.87 area, giving us a couple of hammer candles, which technically informs us that buyers are present around this area. So we saw the first hammer candle right here. We saw another one right here. In fact, we had 3 hammer candles consecutively, further emphasizing the strength of the buyers along this zone. So with this observation, we decided to join the bullish momentum even before the breakout of that range happened. In order to do this, we marked out the $76.20 level, and then we had a buy stop order above that structure, and it was at this moment we had our first buy position for the week, a couple of hours into Monday's New York session. And remember, we had multiple levels like the $76.50 area and of course the $77 area, all of which we used to maximize the bullish momentum. And as at yesterday, we were running with over 300 pips in profit on this particular asset. Now, during our live session yesterday, we decided that we will be continuing the momentum. Remember, as at yesterday's live session, price action was around that $77 area. And what we agreed here is that we will continue to maintain a bullish bias in this market. And to capitalize on that buying opportunity for yesterday, we decided to add more buy position at the breakout of the $77.32 level. Then we added one more at the $77.75 area, and of course the $78.50 level, which did not do very well at all. And of course, if you had moved your stop losses like we usually do in this community, when price action moves significantly in our favor, you must have been taken out of all buy positions with at least 120 pips in profit on that one. And so far this week, we've done pretty well so far. So congratulations to everyone who had capitalized on this opportunity. So with that being said now, how do we intend to capitalize on the next move at this point in time? Well, before we go into the technical details, let's look at the various factors that has been affecting this market behind the scenes. Now, one of the major conditions our scenario that has been supporting this bullish idea so far is the current geopolitical tensions going on in the Middle East, which of course incites a sign of concerns as regards to disruption of oil supply from from the east to Asia. Now, according to Reuters report yesterday, OPEC Plus is considering extending voluntary oil output cuts into the second quarter. Remember, they've been doing this for the last 4 months or so, and as of today, the current total cut is running at 2.2 million barrels in total for the OPEC Plus members, and they are planning to do more oil cuts again into the second quarter, which may likely and artificially increase the prices of oil. But I still want to feel that most of the members of OPEC Plus are not really adhering to this idea of cut production, which is making it a little bit difficult for them to monitor. Now, despite this, we have concerns lingering over high borrowing costs, stifling the global economic growth and consequently reducing oil demand. Despite these ongoing geopolitical tensions in the Middle East, there are also signs of a robust U.S. physical market, which is tempering the impact on global oil demand, potentially limiting the downward pressure on crude oil prices. Now, recent data from China indicates a surge in demand for U.S. crude exports, which Chinese buyers actively engaging in the market post the Chinese Lunar Year festivities, thereby bolstering crude oil consumption. On the other hand, the American Petroleum Institute (API) disclosed yesterday that the weekly crude oil stock for last week surged to 8.428 million barrels for the week, which is up from the previous 7.168 million barrels, signaling an increased supply. And of course, when supply beats demand, you know what happens. Price definitely wants to drop. Now, in response to this market dynamics, personally, I'm going to be maintaining a bullish outlook until the current structure states otherwise. So we need to be very, very vigilant. And it is worth noting that the market participant will also be looking forward to the U.S. Energy Information Administration report, which is coming up later today. And of course, it's definitely going to be giving some fresh impetus into this market. Though the EIA reports market participants are expecting a decline in that stock. So we shall see what the actual data will be on that one. So taking into consideration all of these factors, how do we intend to position ourselves for the next move? Now let's scale up into the daily time frame so we can have an holistic perspective into what has really been going on in the market and what led to the decisions we made at the beginning of the week. Now, right here on the daily time frame, the first thing we did was to take into consideration the character of price action since the month of July of last year. And when we did this, the $78.50 area was very, very obvious, and it has played a major role in determining the direction of price action since the in the last 6 to 7 months. Now, if we look at the structure closely, you will see how this level had played a major role in determining the direction of price action. Look at what happened here in the month of July / August. It was more of a buying niche, as you will see here. And not until the month of November of last year, price broke down the structure. And since that moment, price action had remained below that structure to further emphasize the strength of the sellers at this point in time. Now look at what had happened here at the beginning of the year, and in the last couple of weeks we saw how this area also have been negating all attempt by the sellers to break through, the buyers to break through that structure, further emphasizing the strength of the sellers around this area. Now, with this situation here, you would agree with me that that level had played a major role in guiding our trading decisions. Now, moving forward, we have a couple of ascending trend line, which of course has been limiting the downtrend continuation from a technical standpoint, which of course has supported a bullish idea since the month of November of last year. And with this ascending trend line since the beginning of the year, we have been expecting that this trend line may incite an uptrend situation that will lead to the breakout of that structure. Now, with the way things are going, we decided to mark out a key level that we will be using to guide our decisions for this week, and that was situated along the $76.50 area. And look at how beautiful this key level shares a confluence with that ascending trend line we identified earlier. And you know how we treat our key levels in this community. If price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying that asset, and unless the key level is broken to the downside, can we start considering selling this asset. Now, with this information we've gathered here, you would agree with me that we were at a crucial juncture at the beginning of the week, so it was very important for us to see how the market participant will be reacting to this confluence to decide if we are going to be buying or selling. Now, when we scale down into the 1 hour time frame, we begin to see things more clearly, which led to our first buy position at the breakout of the $76.20 area. Now, as it is right now, going into the New York session, especially as we anticipate the GDP data, which of course will affect such assets, which is a US denominated asset, and then the EIA report, I was able to identify a simple structure this morning to guide our trading decision. And this one right here is this ascending trend line, which has been supporting the bullish perspective since the beginning of the week. In fact, I have a couple of them. We have one right here, but the major one is this top one highlighted in red color. Now, you know how we use our ascending trend line. As long as price remains above the ascending trend line, we shall obviously look out for patterns and structures to support the idea of buying. But if price breaks down the ascending trend line, then that will lead into some bearish opportunity. Now, looking at the structure after price tested that same $78.50 level I did show you on the higher time frame, you'll see price had continued to drop to the downside, leading into a situation where in the last 3 hours, price action has been oscillating right around the ascending trend line and the $77.75 area, making it a crucial juncture to monitor today. Now, I have stated here that if price breaks down this ascending trend line, we will be looking out for selling opportunity. And of course, I do have a sell position triggered already around this area with an attempt price to continue to the downside. And if it continues in such a way that it breaks down the $77.32 level, we will be adding more sell position. And if price goes ahead to break down the $77 level, we will be adding more sell positions to our existing trade. Now, we have multiple levels to guide this bearish idea if price continues to nosedive to the downside. However, if the opposite happens around here and then we see something like any form of reversal pattern, it could be a double bottom structure, head and shoulder, or even a falling wedge, we will be buying the breakout of the neckline of that reversal pattern to join the uptrend continuation. And if price goes ahead to break out of the $78.50 level, we definitely will be adding more buy positions to our existing trade. So this is my simple view on this particular asset for today. I hope I made myself clear, but if you have any questions whatsoever as regards to my explanation, feel free to let me know in the comment section below. So as usual, I will be taking the next 10-15 seconds off to see if there are any questions before we go ahead to our next asset on our watch list for today. And you can use that time to also mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So, in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, popularly known as the Nasdaq. And in fact, this week has been a little bit choppy due to the anticipation of the US macroeconomic data for this week. Remember, we are looking forward to the GDP, the core PCE, and the ISM manufacturing PMI, which is coming up later in the week. And the anticipation of this event has incited the idea for major key players in the market to step aside, waiting to see what the data will be before making any investment decisions. And as a result of this anticipation, we saw how the market has been trading range bound. Remember, at the beginning of the week, we did identify this range where price action was initially confined within the 17,940 level and the 17,875 area to emphasize the prevailing uncertainty in the market at that particular point in time. And of course, we did capitalize on the buy opportunity after price broke out of that structure. But as you will see, that momentum did not last long, though price moved about 70 pips thereabout. And of course, we moved our stop losses accordingly to protect that position. And if you had done so too, you must have been taken out with some small profit, or let's worst case scenario break even. Then yesterday during our live session, we begin to notice how it has become difficult for sellers to break through that 17,900 and 17,875 zone since the beginning of the week to emphasize the strength of the buyers around this area. Now, this continued into yesterday morning, and we said here that as long as price still remains above this structure, we'll continue to hold on to a bullish bias, where we will be looking out for buying opportunities at the breakout of the 17,940. And unfortunately for buyers, that move too did not work very well, as we saw price action snap back into our entry point, taking us out of that position as well. Now, with this whole situation here, it is becoming more obvious that buyers are losing that momentum, as you will see here that price action had consistently found series of lower highs since the new week has begun, to emphasize the strength of the sellers at this point. And of course, you know how we use our key levels. As soon as price breaks down our key level, we want to be selling that asset. So as a result of this, the breakdown of the key level at the 17,900 triggered a sell order, and of course the 17,875 as well also triggered another one. So currently we have two sell positions running, while the first one is running with a very small profit and the second one is running with a small loss on this one. Now that price action has broken down that temporary demand zone we identified yesterday, what are the chances that sellers will maintain the bearish momentum, which could incite more selling opportunities in this market? Or will this breakdown today turn out to be a false one? Well, before we can answer this detail, let's take a quick look at the higher time frame so that we can have an holistic perspective into what is going on in this market. Now, scaling up into the daily time frame, we will begin to see what we saw at the beginning of the week. Now, what we did on the daily time frame was to take into consideration the character of price action since the month of October last year. That is about 5 to 6 months historical data. And it's quite obvious that the market has been bullish. And in fact, we saw the transition of price action into an ascending channel. You will see this clearly when we connected the series of higher highs, giving us the resistant line of the ascending channel, while this connection of the series of higher lows gave us the support line of the ascending channel to further buttress the strength of the buyers in this market. Now, we also talked about how crucial price action is, the current market condition, as we did emphasize on how we are at, say, an all-time high. And usually when we at an all-time high, there is this psychological expectations that some key players in the market will be taking some profit off the chart out of fear that price may crash from that side. So it usually takes a while before price action acclimatizes to the zone, and this may lead into choppy market conditions like a retracement phase, consolidation phase, and this is exactly what we have been seeing here in the last couple of weeks. As you will see, price action has been confined within the 18,100 and the $17,615 level. Now, to guide our trading decisions for this week, we have our key level situated at the 17,900. Of course, this level had played a major role in determining the direction of price action in the last 3 weeks. And one of the things that makes this level very crucial is how it beautifully shares a confluence with that ascending trend line. Now, what we were looking out for is for to see how the market is going to react to this confluence. If price breaks down this confluence, then we will be looking out for patterns and structures that will support the idea of selling. And if buy pressure persists above this area, we will definitely be looking out for ideas to buy this asset. And this led to buying this asset for us at the beginning of the week, which of course did not do very well before the sell position got triggered this morning. Now, with the information we have here, let's scale back down into the 1 hour time frame to continue to monitor how market participant will be reacting to this key level at the 17,900. Now, scaling down back down into the 1 hour time frame, let's see how we intend to position ourselves for the next move. Now, if you look at the 1 hour time frame, considering the nature of price action since the beginning of this week, you will see that we have something that looks like a pennant, or let me call it a flag pattern, if we consider the impulsive move that brought us to this point. Though we had some series of lower highs, however, we can see that we have a demand structure around this area. Now, with this structure here, technically, the idea of buying is not yet negated, as we may still see price break out the resistant line of this pattern, retest it to incite an uptrend move. So the idea of buying this asset is not negated yet, so we'll still be looking out for buying opportunities above the $18,000 area, the 18,045, and of course the highest point for this year, that's the 18,100 level. But if price remains below this temporary demand zone, obviously we have no other choice than to continue to look out for selling opportunities. And in fact, for those of you who missed out on the bearish momentum, the bearish opportunity this morning, you can have your sell stop order right below the 17,875 to capitalize on the downtrend continuation. So this is how we are going to be managing our trades for today. Below the 17,875 area, welcome selling opportunities, while the breakout of this descending trend line here will prepare us to start buying this asset today. So let's mark out these levels on our chart. Very, very important, as they will be playing a major role in guiding our independent trading decisions for today. So this is my simple view on the USTech100. Let's see how the market will play out today, and of course we will be back here tomorrow to review how well it has done. So if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds to see if there are any questions before we move on to the next asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page here, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset we are looking at this morning is going to be the GBPUSD. And what a choppy market condition we have here since the new week has begun, before we finally saw this bearish traction that gave us over, let's see how many pips. Remember, we said we will be selling below the 1.26830 area, and we saw price move over 60 pips on that one. And of course, we had multiple entry. We had the 1.267 moved about 50 pips. The third one here moved about 30 pips. And the fourth one moved about 30 pips. So we have close to 200 pips on this particular asset. And by now, you must be out of all your sell positions if you had moved your stop losses accordingly. And well done, everyone, for doing so. Now, as it is with the way things are going, the US dollar appears to be gaining some strength as it recovers amidst a cautious market sentiment. Now, market participants appear to be showing reluctance towards risk-sensitive assets like the pound sterling as they await today's crucial US economic data for fresh impetus. Now, despite the disappointing US durable goods order reports that came in yesterday, we talked about this earlier, market participants seem confident that the Federal Reserve will hold off on interest rate cuts until the June policy meeting. Now, this renewed faith in the US dollar is driving demand and putting pressure on the pound sterling. Now, the downward trend remains unaffected by the recent hawkish comments. I did talk about this earlier, that the Bank of England governor expressed the need for more evidence of easing inflationary pressure before considering rate cuts, and this of course did not really do anything at all to affect the value of pound sterling. Now, with this situation here and considering this decisive break of our key level situated at the 1.265, how do we intend to position ourselves for the next move today? Is this a good signal for us to get ready and prepared for selling opportunities as the US macroeconomic data draws near? Or is this going to turn out to be a false breakdown with the anticipation of a bullish momentum in response to the hawkish remark from the Bank of England's deputy governor? Now, for us to have a clearer perspective into this market, let's run through the higher time frame. Let's have an holistic perspective into what is really going on here. Now, on the daily time frame, we did took into consideration the nature of price action since the beginning of the month of July of last year, which obviously emphasized that the market has been bearish, as you will see after connecting the series of lower highs. Now, despite the strong bearish momentum here, we saw how as soon as price tested that area around the 1.209 in the month of October of last year, we saw a building momentum in favor of the buyers, resulting into a series of higher lows, giving us this ascending trend line to work with. Now we have a beautiful contraction right here where we have been anticipating either the breakout of the descending trend line for an opportunity to buy, or the breakdown of the ascending trend line to incite an opportunity to sell. Now, to help us easily position ourselves for the next move, we have our key level, which is duly situated at the 1.26500 area. Now, look at how beautifully that 1.265 shares a confluence with both the ascending and descending trend line. And of course, you will see how the 1.265 had played a major role since last year May to decide if price will be going up or down. Now, as we head into the New York session today, we do want to see how the market participant will be reacting to this key level at the 1.265. Will price break down the key level, welcoming selling opportunities, or will price action remain above the key level, leading to the breakout of the descending trend line to incite buying opportunities? Now, you would agree with me that we are at a crucial juncture in this market where, depending on how market participants react to this confluence, will determine if we continue to buy or sell this asset. Now, with this information we've gathered on the daily time frame, let's scale back down into our 1 hour time frame to see how things have been playing out since the week began. Now, there's one more thing we identified on the 4 hours time frame, which I think is necessary we also look at. Now, looking at the 4 hours time frame, here on the 4 hours time frame, we consider the character of price action in the last couple of weeks, and of course we had an ascending channel to work with here. Now, when we connected the series of higher lows, we have the support line of the ascending channel, and when we connected the series of higher highs, we have the resistance line of the ascending channel. And look at what happened about 8 hours ago. We saw price action break down the support line for the first time in 2 weeks to emphasize some signs that sellers may likely come in, which could favor the US dollar going forward. Now, from a technical standpoint, whenever we see price break down a key structure like this, we do expect that price at some point may come back to retest the structure in an attempt to continue the downtrend scenario. Now, is that going to be the case today, or will price just retest the 1.265 to ride the trend to the downside? And please do not forget that this is where the descending trend line we identified on the higher time frame is. Now, the only condition that will make us buy the GBPUSD today is for this descending trend line to be breached and broken to the upside. But as long as price remains below that descending trend line, we have no business buying this asset. So what we are going to be doing now is to see how we can join a downtrend continuation. Now, so with the information we've gathered on the higher time frame, let's scale back down into the 1 hour time frame to see things more clearly. So I will just zoom right into the structure and let's see what has been going on here. Now, price has broken down the 1.265. Now, what we are going to be doing today is to see, look at what happened here. As soon as price tested the 1.26 let me call it 220. In fact, I would like to mark out that level. So let's mark it out here. So we have the 1.26220 area, 26220, 26220 level. So we have that marked out. This is the lowest point price action has been for this week. So it's reasonable to have a sell stop order below the structure. So if price can break down the previous low, we look out for more selling opportunities. So as it is right now, price broke down the ascending trend line we identified on the 4 hours time frame. And since price tested the 1.262, we have seen some signs that buyers are coming in. So will this be a retracement of the structure, where depending on how price reacts to the 1.265, the 1.26565 and the 1.267 will determine if we are going to be selling. Now, if we see any form of selling pressure around the zone between the 1.265, hold on a second, let me highlight it so we can see. So I want to call this area a sell window between this area and this area where the ascending trend line is broken. So we have a sell window identified here. So I like to give this a green color and place it right inside the box. Let's bolden this a little bit, and then we give this a light yellow color. Okay, here we go. So we have a sell window here. Now we want to look out for reversal patterns within this area for us to join a bearish move. So if price comes into any of this point, what we are looking out for is a form of reversal pattern. Let's say a double top, head and shoulder, or if rising wedge where the breakdown of the neckline will welcome the bearish buyers here. So we still maintain a bearish bias as long as price remains below the structures that was broken. Now let me show you something here. Okay, let's go back to the 4 hours time frame. I need this descending trend line we marked out on the daily time frame to show on the 1 hour time frame. So because it's going to be a major barrier to guide bullish opportunities. So we have this descending trend line right here. So let me highlight it so that you can see clearly. So this is the descending trend line we identified on the daily time frame. Now, if price breaks out of this descending trend line, we will be looking out for buying opportunities above the 1.26830 area, and we shall be looking out for more opportunities to buy at the breakout of the 1.269 and the 1.27, which happens to be the highest point price action has been for this week. So let's see how the market will play out. So we have a beautiful structure marked out right now, where we are only going to be considering to buy only when price breaches that descending trend line. Ends, we position ourselves above the 1.26830 level to capitalize on the uptrend, and then looking out for more opportunities to buy at the breakout of the 1.269 and the 1.2700 area. So this is what we will be looking out for to join an uptrend move. And as regards to selling this asset, remember I told us all that at this point everything is still looking very bearish, and we want to see how far this bullish momentum we see now is going to go. Now what we will be looking out for to join is any form of reversal pattern or selling pressure. Then we mark the neckline and then join the bearish move to the downside. So please, I would encourage us all to mark out this sell window zone too as well, as we want to see how the market will react to the structure to decide if we are going to sell or buy this asset today. And if price goes ahead to break down the 1.26220 level, we definitely want to be adding more sell positions to our existing trade. So this is my simple view on this asset for today. I hope I made myself clear. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. All right. So I see your comment, Salim43. I see you, Breedy. Good morning to you guys. And I also see Amza Shah. Good morning to you, Amza Shah. You're asking about the BTC. Unfortunately, the BTC is not part of the asset we are monitoring for this week. So I usually emphasize there that if you want us to follow a particular asset for the week, please try to attend our Monday session, where you have the privilege of submitting any asset you want us to look at for that particular week. So for this week, we are only monitoring 4 financial assets. So if you want us to check on the BTC USD, well, I would suggest that you come in Monday morning and let's have it in our watch list for the week. All right. I hope I answered you, Hamza Shah. So in the absence of no further questions, I'm of the opinion that we are all on the same page, and in that regard, we shall be moving right into the final assets on our watch list for today. So the final asset on our watch list for today is my favorite, of course, and that is the XAUUSD. And on the XAUUSD, we've had quite some choppy market conditions at the beginning of the week, which of course we know why that has happened, and we positioned ourselves. We had some couple of buy positions. We had a buy positions which did not do very well. I think we saw we capitalized on this bullish opportunity right here yesterday, and it moved about 45 pips, and I do hope you moved your stop losses accordingly. If you have done so, you must have been taken out of that position at break even. And during our live session yesterday, we did emphasize that due to the inability of buyers to break through that zone between the 2040 and the $2035 area, we may likely be seeing a bearish move to the downside. And to capitalize on that bearish opportunity, we did talk about how important this ascending trend line is going to be playing a major role in guiding that bearish momentum. So we were looking out for the breakdown of that trend line before joining that bearish move. And to position ourselves for that move, we did identify this level at the $2,033.50 level to join that bearish move. And look at what happened exactly. Price broke down the structure, and in fact, for those of us who missed out, the market came back to retest, and since then price action has been dropping to the downside. And for those of us who capitalize on this opportunity, you will be currently running with a minimum of 65 pips on the first position, and the second position will be running with about 30 pips, while the third one is currently running in a loss of about 20 pips. And for those of you who still have a sell position running, kindly move all stop losses between the 2030 and the $2,028 zone to ensure that you give enough breathing space for price action to breathe. Now, with a well-secured position, how do we intend to capitalize on the next move on this asset? Well, like I said earlier, we have sell positions activated, so we ensure we secure our position as the US dollar is currently undergoing a recovery. And of course, we saw how the US Treasury bond yield shows some sign of slight recovery this morning, while market participant turns cautious ahead of the impending US GDP data released today. Meanwhile, gold prices continues to over within a range during the Asian session to further emphasize the prevailing uncertainty in the market at that point in time, which of course led to the breakdown of that structure. Now the question here is, will price come back to retest the structure to incite a downtrend move? That is a very crucial question to answer today. Now it's also important to note that the recent resurgence in the USD buying is fueled by optimistic Federal Reserve expectation, posing a significant obstacle for gold prices. Additionally, the prevailing risk-on sentiment in the market further suppresses gold's value. However, I would not like us to ignore the potential decrease in US Treasury bond yield, which could hinder aggressive US dollar bullishness and offer support to the XAUUSD. But as it is right now, market participants at this juncture are eagerly awaiting the US GDP figures set to be released later today, along with speeches from FOMC members. And of course, these events are anticipated to inject momentum into both the US dollar and the gold prices. So in this regard, it is pertinent that we secure these current positions we have right now, as we may likely see some volatility happen in response, in anticipation, or in reaction to whatever the data from the US GDP brings. Now, to guide our trading decisions for today, we have a beautiful descending trend line here after connecting. In fact, I would like to double this so that we can capture majority of this pivot highs. So we have this descending trend line, which we will be using to guide our trading decisions for today. And you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we obviously want to be looking out for patterns and structures that support the idea of selling. Now the question here is, how far will this bullish momentum go? Will it get into the $2,030 area, which interestingly shares a confluence with that descending trend line? And if it gets here, we want to exercise patience and see how the market is going to react to the zone. Are we going to see continued selling pressure around this area? That is, buyers finding it difficult to break out of that descending trend line. And if this happens, we want to be selling the breakdown of the neckline to the downside, where we shall be adding more sell positions to our existing trade if price action goes ahead to break down our key level at the $2,025 area. So this is how we are going to be managing a bearish bias on this asset today. However, If price action breaks out of the 2030 and that descending trend lines, then this will be welcoming a bullish idea. So a breakout and a possible retest of structure will be all we need to join an uptrend move. And remember that we have multiple levels here that we can use to maximize the potential of this bullish move. So we have the $2,033.50 level, we have the $2,035 level, and of course we have the $2,040 area, all of which, if price breaks out, we will be adding more buy positions to our existing trade. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And please don't forget to mark out this descending trend line as well, as it's going to be playing a major role to make us gauge if sellers still maintain the bearish momentum or they've lost it. So this is my simple view on the XAUUSD for today. I do hope I made myself very clear. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So I will be taking the next 5 to 10 seconds off to see if there are any questions before we start rounding off on today's XAUUSD Live Technical Analysis session. So I see your question here has 1881. Good morning to you. You said, will XAUUSD break $2,040 level today? Well, we do not know, but we have structures that we are going to be using to guide our decisions. And like I said, I'll encourage us all to mark out this descending trend lines that has been supporting this bearish momentum in the last 24 hours. Now, if price can break out and retest this descending trend lines, then we will be looking at the possibilities of buying and adding more positions as price continues to break out these levels we identified at the $2,033.50, $2,035, and of course the $2,040 area. So it depends on how price reacts to the descending trend line. And if price remains below the descending trend line, then we have no business considering buying this asset. So please take note of this one. It is very, very important for our trading decisions for today. And I do hope you marked it out as 1881. I hope I answered your questions appropriately. In the absence of no further questions, I think we have come to the end of today's XAUUSD Live Technical Analysis session. It has been a wonderful moment with you guys. I really enjoyed every single moment. And so far today, we were able to attend to the 4 financial assets on our watch list for this week, which includes the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD, all of which we were able to identify simple trading setup using our basic tools such as trend lines, key levels, and chart patterns to position ourselves strategically for the next move. And I do hope you guys marked out these levels accordingly on your chart. If you have done so, well done to you. So all we just need to do is allow the structures to mature before we jump into any positions. So and always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And so with this understanding, we want to ensure we have a well-defined risk management strategy in place to protect and mitigate against any risk on our portfolio. For those of you who joined us for the first time today, I hope you are able to gain 1 or 2 things from what we discussed. If you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information you gather here to make your own independent trading decisions. So it's on this note, I wish us all the best of luck today, and I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and of course prepare for another interesting edition tomorrow, where we shall be looking forward to the core PCE, another high impactful event that has a tendency of being a catalyst for price action tomorrow. So you do not want to miss out on that session. So I wish you the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.